The hedge fund industry is estimated at around $2 trillion US. Here with me now to discuss the world of hedge fund investment is alternative investment specialist Katherine Hill. Katherine, thank you very much for coming in the studio and joining me. Now, the hedge fund industry, it took a bit of a tumble last year as it struggled to cope with the turmoil amid the European debt crisis and the volatile markets. Now, so far this year, we've seen a better performance from them, and they seem to have dragged themselves up from the turmoil of 2011. In fact, we've actually seen the best start of the year since 2000 for the hedge fund industry. Is that right?
That's correct. So everyone's happy about positive performance, especially after 2011, which was very disappointing. But there are exceptions. There were hedge funds that were able to do exceptionally well last year. But I would like to say this. So far, I've been looking at the NAVs, getting monthly performance newsletters from managers, and most of them have said that they had placed themselves too defensively at the beginning of the year. They were worried about the price of oil. They were worried about what's happening in Europe. So actually, the average hedge fund since the beginning of 2012 has only done about 3 or 4%. Compared to the equity markets, that's not stellar performance. It's good performance, but actually it's not stellar performance considering the equity markets have had really great performance. So in comparison though, is the equity markets the best benchmark? Maybe not for all strategies, but I would say we have a good start, we have a positive start, but I wouldn't say it's the most stellar performance.
What about funds in emerging market countries?
Both the hedge fund and private equity fund world have gone back into the emerging markets. Before the financial crisis, many of the large hedge fund and private equity firms had offices on the ground, but then actually closed shop. Now they're returning, which is a positive sign. Most investors would prefer that they have local presence, meaning if they're investing in a fund in India or Brazil, they would like to have an office there. They would like to have people who speak the language. So emerging market funds are definitely attracting more attention. It's not that they were ever out of fashion, I would say, but people become very cautious when their local markets in the US or in Europe are rocky. They're more cautious about investing into an emerging market. But definitely the numbers also show that there's areas of growth and investors need to go back into those countries.
What kind of hedge funds are the preferred strategies though at the moment?
Well, the preferred strategies seem to be global macro hedge funds and equity long short. And what's interesting is that those are also the strategies that most funds are launching these days. So there's been many launches recently, and they seem to be in a lot of those two strategies, and that's where a lot of investors are investing. But I wouldn't always say that there are strategies that are doing incredibly well that are in country specific, for example, like you mentioned earlier, but also more and more investors are looking to the manager. It's not that they're looking for a strategy bucket. They're looking for a manager that they hope that can weather all seasons. So it's not so much anymore, I'm looking for this strategy. It's I'm looking for a manager that can handle what's going to happen in the future.
Now, Katherine, let's move on to discuss hedge fund seeding platforms. But first of all, for our viewers out there that aren't so familiar with these kind of platforms, perhaps you can explain briefly and also expand on some of the pros of such a platform.
Hedge fund seeding platforms have grown recently. Goldman Sachs, Protégé Partners, Cantor Fitzgerald, they have launched these platforms for emerging managers. They're smaller hedge funds that need seed capital. The advantage of that is, one, you get in early. It's like discovering a uncut diamond. It's something, it's new, it's emerging, you want to get in day one. Investors are also very proud to say, yes, I invested in this manager day one. Secondly, there is evidence that the first 2 years of a hedge fund, they perform the best. Now, there are also hedge funds that have been around 10 years that have been amazing. So, like I said, it's on average the first 2 years, hedge funds do really well. Therefore, that's when you want to get in. So those are two great advantages. And also the third one would be if a large institution is looking at these managers, that does have to says something about the quality of the manager. You still are responsible for your own due diligence and checking the facts, but if these institutions feel comfortable enough investing in these managers, then that's a good sign.
Now, speaking on the same subject, the climate for new startups seems to have re-emerged again after there was a shortage of capital and support available for these alternative new managers following the financial crisis of 2008. Now, do you think there's enough opportunity and a strong opportunity now available for them?
Yes, I do. Investors are more open-minded. If you had launched a fund 2 years ago, I think you would have had a lot of trouble raising money or even getting anyone's attention. There are now emerging manager conferences. There's a new publication just dedicated to emerging managers, So that says a lot. That says investors are looking, and they're more likely to take a meeting with you. They're more likely to look at your business seriously. So I do think that right now it is a good time.
Well, thank you very much for coming into the studio, Katherine. It was a pleasure having you here.
Thank you for inviting me back.
Thank you. Well, that's all for today's interview, but for more financial news and interviews, always stay tuned to Dukascopy TV. Goodbye for now.